Welcome to the My Citizen Agency channel. The topic of the next 2 episodes is how to open an individual entrepreneur or limited liability company in the European Union if you already have a passport from one of the EU countries. In these videos, we will take a step-by-step look at the opportunities that European Union citizenship opens up, how business forms differ in different European Union countries, what requirements are imposed by tax and registration authorities, and what is important to consider in order to start a business quickly, legally, and without unnecessary bureaucracy. In today's episode, we will focus on the basics. You will learn what advantages an EU passport gives you when living and working in other EU countries, how the format of a self-employed person differs from that of a limited liability company in European law, and what is right for you, how to choose a country to register your business, taking into account taxes, social contributions, and actual activities. This is basic knowledge that is essential for putting theory into practice. In the second issue, we will take a detailed look at how to register as a sole trader, how to register a limited liability company, how VAT works in the EU, and what reporting requirements entrepreneurs face. A passport from one of the EU countries automatically makes you a citizen of the European Union. This is not just about visa-free travel. You gain a whole range of economic freedoms within the Union: freedom of movement, the right to live, work, and do business in other EU countries. The right to live in any EU country. You can move to another EU country and stay there without additional permits. All you need is a valid passport or ID card. In practice, this means that you can easily move there and register as a sole proprietor or company. The right to work and be self-employed on the same terms as locals. EU citizens have the right to work in another EU country under the same conditions as citizens of that country, as an employee, as a self-employed person, or as a director of their own company. Discrimination based on citizenship is not allowed in access to private business, wages, and basic social guarantees. For you, this means you can officially become self-employed in any European Union country. You can be a director and/or founder of a local company. You do not need a separate work permit for entrepreneurs just because you are not a citizen of that particular country. You already have EU citizenship, the right to set up a business and provide services throughout the Union. Freedom of establishment and freedom to provide services in EU law give individuals and companies the right to open businesses, branches, and representative offices in other EU countries, conduct activities there on a permanent basis, provide services in other EU countries on a temporary basis, even without setting up a separate company if you already work legally in one of the countries of the Union. That is why, if you have an EU passport, you can register as a sole proprietor in one country, open a limited liability company in another, work with clients throughout the European Union. The only issue is proper registration and taxes, not visas and permits. How this differs from the status of third country nationals. For citizens of countries outside the EU, the picture is different. In order to live and do business in the EU, they usually need business or work visas, residence permits for business, investor programs, confirmation of a business plan, jobs, etc. With an EU passport, you don't have this ladder: visa-free entry, residence and work like locals, business registration on standard grounds without a separate business residence permit. Therefore, the key advantage of an EU passport is that you immediately play by the rules of a resident, not an external investor. All bureaucratic tasks boil down to choosing a country, form of business, and proper registration rather than fighting for entry and residence permits. European law does not have the term sole proprietorship as we know it, but there is a very close analog, sole trader or self-employed, which is an individual entrepreneur. The second basic option is a limited liability company, GmbH, SRO, SPZOO, SARL, SRL, etc. This is analogous to LLC, sole proprietorship or self-employed. Essentially, you are the business. You and your activities are not legally separate. Advantages: the simplest and cheapest start. The official EU portal clearly states that a sole proprietor is the simplest and least expensive type of business. Minimal bureaucracy. Registration and reporting are significantly easier than for companies. As a rule, there is no authorized capital, fewer formal requirements, and simplified accounting, often ideal for starting freelance work. Many European freelancers start out as sole traders. It's a faster way to get started, test the niche, and avoid spending money on maintaining a company. A disadvantage to keep in mind: full personal liability. As a self-employed person, you are personally liable for the debts and obligations of your business. This is clearly emphasized in both European and national resources. A creditor can claim your personal property if your business fails to pay. In other words, sole proprietorship is fine as long as the risks and turnover are manageable. Consulting, IT freelancing, small services, where you understand that the likelihood of large claims or losses is minimal. LLC or limited liability company. An LLC in the European version is a separate legal entity. The company itself owns assets, enters into contracts, and is liable for its obligations. Key features: limitation of personal risks. As a rule, participants are not liable for the company's debts with their personal property. They risk only the capital they have contributed, except in cases of gross violations, for example, irregularities by a director. Easier to work with partners and investors. Limited liability companies are the standard form for joint ventures. You can distribute shares, join and leave the group of participants, and attract investments. It is considered normal for hiring. For employees, large customers, and suppliers, LLCs usually look more serious than sole proprietorships, especially when it comes to long-term contracts and significant amounts of money. But there are also disadvantages. It is more difficult and expensive to start up. Almost everywhere you need to have authorized capital and formal registration in the commercial register, often through a notary. For a classic GmbH in Germany, for example, the law sets a minimum capital of 25,000 euros, part of which must be paid in before registration. More reporting. The company is required to maintain full accounting records, submit annual reports, store and legalize books, and update data in the register. This requires an accountant and regular maintenance costs. How to choose in practice. A simplified rule that really works in the EU. Freelancing, consulting, and initial solo projects, it is often more advantageous to start as a self-employed individual. Minimal costs and formalities, you can quickly test your idea, and you do not spend resources on maintaining a company. Business with a team, significant assets, long-term contracts, investment plans, it almost always makes sense to register as a limited liability company. This way, you separate personal risks from project risks and increase the trust of your partners. At the same time, in many countries, tax advisors recommend considering the transition from an individual entrepreneur to a company when turnover and risks increase, but the specific thresholds and benefits depend on the country, type of activity, and your personal situation. Conclusion: sole proprietorship in the EU means speed and simplicity, but with full personal liability. LLC means more formalities and expenses, but with protection of personal assets and better positioning for business scaling. The European Union is a single market of 27 countries. Formally, as an EU citizen, you can register a business in any of them, including as a self-employed person or through a company. However, the rules on taxes, minimum capital, reporting, and business registration are set at the level of each specific country, and they vary greatly. The official EU portal explicitly emphasizes that legal forms in different countries may have different names, with different tax rates and capital requirements, so you need to check the national rules before registering. At the same time, registration in one country gives you access to the entire EU single market, 27 countries and hundreds of millions of consumers within a common economic space. To avoid confusion when making your choice, consider the following points before you start. Where you actually live and work. The country where you actually live and work is not just a background factor, but a key factor. Social security contributions. The general principle in the EU is that both employers and self-employed persons usually pay social security contributions in the country where the person actually works, regardless of where the company is registered. This is explicitly stated in the rules for coordinating social security systems. Contributions go to the country of actual work, even if the business is legally registered in another country. communication with government agencies. If you live in the country of registration, it is easier. You have a local address, you understand the language of correspondence, and you can personally visit the bank, notary, or tax office. Tax and management tie-in. In European practice, more and more attention is being paid to where a company is actually managed. Tax authorities and consultants note that, in addition to the country of registration, the so-called place of effective management is important, the place where key management and commercial decisions are made. If, for example, you live in France, spend most of your time there and manage your company from there, but it is formally registered in another country, the tax authorities may ask, shouldn't this company be considered a tax resident of France? Therefore, in most cases, it makes sense to open a company where you actually live and work. This way, there will be fewer discrepancies between the place on paper and the actual situation. Where are your main customers and activities? The second important factor is the geography of your customers and operations. Actual market. Many European guides on starting a business directly advise beginning with an analysis of the country where your main activities will take place, where your customers, partners, suppliers, and planned office are located. If 90% of your customers are in Germany, you sign contracts there, travel to meetings there, and plan to hire local employees, then Germany is the natural choice rather than any other country just because of a formally lower tax rate. If you provide an online service for the entire EU, then you need to look at the bigger picture: language, ease of reporting, VAT requirements, IT business support, digital government services, etc. The closer the country of registration is to your actual operations, the fewer questions you will have from banks, tax authorities, and regulatory bodies. What tax rates and contributions are right for you? Yes, taxes vary from country to country, and this is also a factor in your choice. But looking at just one figure in the corporate tax rate table is a mistake. Practical recommendations for choosing a country of registration usually suggest considering several factors at once. Corporate and/or income tax. In some countries, the rate is lower, in others higher, but the structure of deductions and benefits can vary greatly. Social security contributions, mandatory contributions to pensions, healthcare, unemployment insurance, etc., can significantly affect the overall burden, both for the self-employed and for directors and employees. VAT and administration, VAT rates, registration thresholds, reporting frequency, and electronic accounting requirements also represent real costs and labor expenses, accounting and support costs. Different countries vary not only in terms of price levels, but also in the amount of mandatory reporting, ranging from simplified regimes to full audits. The idea is to look at the big picture, how much you will actually pay and how much effort will be required to comply with the rules, rather than just the bare percentage rate for a single tax. Registering in another EU country, when it is realistic and safe. As an EU citizen, you have the right to start a business not only where you live, but also in any other EU country. EU citizens can set up companies as sole traders or through legal entities in any EU country. But it is important to note that registration in another country must be based on a real economic connection with that country, rather than simply being an entry in the register. For several years now, European institutions and national authorities have been stepping up the fight against so-called letterbox companies, companies that are registered in one country but do not conduct any significant business there and are used only to evade taxes or social security obligations. For such structures, real presence tests and criteria for sufficient substance are being introduced: an office, employees, local contracts, turnover, etc. Hence the conclusion. Registering a company, say in a country with convenient electronic reporting and lower taxes, is possible in principle, but you need to be prepared to show that there is real activity there: management, office or address, staff, real clients or projects, and not just a pretty legal shell. Today, we have covered the basics: the advantages of an EU passport, the differences between sole proprietorships and limited liability companies in the European system, and how to choose the right country to register your business in order to avoid bureaucracy, unnecessary expenses, and tax risks. But this is only the beginning. In the next issue, we will move from theory to practice and take a detailed look at how to open an individual entrepreneur in the EU, step by step, how LLC registration works in different countries, what you need to know about VAT and the OSS regime if you sell throughout the Union, what taxes, social security contributions, and reporting await an entrepreneur after starting a business. If you want to understand how to use the opportunities offered by an EU passport to their fullest potential and start your own business in Europe without any mistakes, be sure to watch the second part. And if you are just planning to immigrate, leave a request for a free consultation using the link in the description. We will study your situation, draw up your personal immigration plan, and prepare a complete set of documents for successfully obtaining citizenship in one of the EU countries. We work individually, taking into account your goals, your lifestyle, and your situation. Thank you for watching this video. If you are interested in this topic, subscribe to our channel and feel free to ask questions in the comments. We regularly publish program reviews, answer frequently asked questions, and share important news about immigration law and life in the EU. Your journey to Europe begins with the first step. My Citizen Agency is there for you every step of the way.